Your market news now. Asian stock markets rallied this morning after 2 days of ferocious selling, which sparked higher U.S. interest rates, trade war fears and attacks by President Donald Trump on his crazy central bank. Equities across Asia closed in the green after another topsy-turvy session that saw stocks initially suffer further heavy losses before bouncing back strongly. The fight back followed 2 days that have seen something approaching panic in global equity markets. Tokyo's Nikkei gained 0.5% to 22,694 points. The Hang Seng Index in Hong Kong gained 1.8% to 25,714 points, while the Shanghai Composite Index moved 0.9% higher to 2,606 points. Over in the United States, Wall Street indices continued their slide in Thursday's volatile session as investors worried about rising interest rates and braced for the impact of corporate earnings from trade conflicts a day before the quarterly reporting season begins. The Dow Jones Industrial fell over 2% to 25,052 points. The S&P 500 gave up a similar margin to close at 2,728 points. The Nasdaq Composite Index dropped 1.25% to end the day at 7,329 points. And so now we cross over to Arabile Gumede, who's standing by for us at the JSE. I see a lot of green today, Arabile.
Certainly, and not just on our board, but you've just pointed out quite a few of those numbers as well across the board, whether it be out in Asia or the United States as well. So finally, some positivity coming back, perhaps sold off just a little too hard when it comes to how the market picture is looking. Even the Rand beginning to stage some sort of recovery. More than 1% gain so far on the all share, but we'll unpack exactly the reasonings and some of the movements that have happened today and what has driven the negative sentiment thus far this week. Perhaps that sentiment continues into next week, so hopefully it doesn't, but we'll unpack that and a whole lot more in a bit. Let's check in though on your European and local markets. As you would have seen there, very little in the red, including gold being the only one perhaps headed a little bit lower, considering what happened yesterday when it was the safe haven stock as everything else got pummeled. Certainly an interesting picture coming out this week. Warwick Lucas, CIO from Galileo Capital, joining me now as we unpack that market picture. Warwick, thank you so much for the time. A much better picture, nearly 2% gained now on the all share. Definitely a better picture as we still in negative territory, however, for the year.
Very much in negative territory from even the last week. I think to some degree what we're seeing today really is just a typical week relief rally. You often see it as traders square ahead of the weekend. You know, we can't say that, wow, this is a great turn that's come through here. I think certainly a messy week, which was exacerbated by the likes of Trump's comments about the central bank, conveniently forgetting that the whole reason why we have politicians moved away from monetary policy is because politicians can't resist the temptation to fiddle destructively with monetary policy when given the choice. So it's well established why you take that option away from them. So, and Trump knows that. So, but I think he's just trying to score the points where he can and to basically line up the Fed for blame when his current stimulative fiscal policy runs out of road. He's now got someone to point fingers at. So that's Trump's game there. And I think it's important to remember that's what he's all about, rather than he wants to try and undermine, take away the Fed's power. It's a political game here.
How long does this run go on for, this relief rally that we're seeing now? There's a lot more, as you said, lost. 2% doesn't cut it, but do we see a relief rally back to those levels, firmly, you know, towards around 55, 56,000 on the all share? Okay,
so I think the key digestion factor here is what does the market do or think in the final analysis about monetary policy in the States. So that's your main disruption point. And I mean, the States really taking some of the heavier pressure there. And the other disruption point is, where do trade discussions with China finally wind up? I mean, and we've certainly seen a lot of hammering coming through in Chinese markets. Still, I mean, we saw Tencent in the last few days coming through, and Naspers on our market as well. And you see all the effective linkages coming through there. So, what happens with China and trade negotiations? And quite clearly, we're facing a situation where if we keep on with a toe-to-toe as China is currently handling it, they are going to come off worst.
Does that mean if Donald Trump and Asia and China in particular do solve that trade story, does that immediately mean we get to see some positives in the market?
Very much so. I think that it is dependent on where interest rates go, because that is part of the lid on the pot. But I don't think there's an awful lot of inflationary pressures out there in the OECD developed economies. I think that US inflation, to me, looks like it's run as far as it should. And that means in the alternative case, if there's no sign of inflation, you get trade issues resolved, it actually winds up starting to paint a potential bullish picture for global equity markets.
Yeah, as you were mentioning a little bit earlier, Naspers, they're gaining almost 5% now, so that is a better day for it. But a lot of value still perhaps to be unlocked in it being at 2,800, a perfect buy position for it, you reckon?
It's quite a nice level. Look, I mean, it's certainly not conventionally cheap, but we're talking about a high growth, high risk area of the economy. Namely, where does tech go? You've got to come up with these great new ideas. Maybe you're the leader, but you then need to actually harvest that profitably, and that's the challenge for Naspers, especially in its businesses outside of Tencent.
Yeah. Let's take a look at that rand then. 1446, finally below 1450 or so. One would hope that it sustainably continues to go down. We're approaching the Moody's decision as well on the ratings agency, on the South Africa's credit rating, rather, should I say, later this evening. But we're also headed towards that midterm budget policy statement, the investment summit, a whole lot more risks as well to South Africa's currency.
Yeah, look, I think in the whole, the week on that front resolved itself quite well. I mean, we started off with the question of, well, would Nene resign on the weekend, and promptly confirms that on the Monday. And we then moved fast forward to the appointment of Tito Mboweni, which I think was a well thought through idea. I think Tito will be an excellent finance minister, and it's a political job, and Tito has political constituency. He's been on the side of Labour before. He's had to work in the trenches. He's then been in the central bank, and he's seen the other side of how economies work and so on. And I think he's the kind of man that can actually bring a bit of empathy to the hard knuckle side of how do economies work and create jobs. And I think that kind of ability to consensus build is something that South Africa desperately needs right now.
Is he not, however, does he have enough time to do the things he should do? And I say that just because next year is the election, and perhaps at that point Cyril Ramaphosa will want to choose somebody for a sustainably longer time. At the same time, you have the MTBPS, which certainly isn't going to be Tito Mboweni's speech. You have the investment summit, which is perhaps Nhlanhla Nene's blueprint as well. Does he for now come across as the takeover, or caretaker, should I say, caretaker finance minister?
I think realistically, the whole of South Africa in a whole swathe of areas, it has got its back a bit against the wall. Getting some recovery back from the disasters that were baked into the national cake by Jacob Zuma's presidency it's quite tricky, and it's time sensitive. I mean, there's a lot of disaster that's baked into that cake that has to be quite quickly addressed. So yeah, time is definitely his enemy, and Ramaphosa's enemy, and the country's enemy.
Apologies for that. Warwick, appreciate your time. A lot going on with regards to the market, as we said. Much better picture than we have seen for the longest time thus far. A lot of green across the board as well. The likes of Naspers, even the likes of Aspen as well, going up quite phenomenally today. Even the Rand headed below that 14.50 mark. We've had a lot of economic data as well come out this week. We head into another week next week as we, of course, build up to that monetary, to the MTBPS rather, should I say, which will be keenly watched. And of course, tonight, we are expecting Moody's to bring out their ratings decision on South Africa around 10 p.m. South African time. What they say exactly will be quite interesting. We are one level above investment grade with a stable outlook. So we're hoping to remain at that level and at some point go even higher. But for now, that's where the buck stops. Cross back to Nzinga and Nompu right after this. Do stay tuned.